Good morning, it's Friday, June 28th, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's fake out in the industrial metals complex. After several strong days of gains, platinum prices yesterday corrected 3.1%, ultimately dragged down that copper market, and then silver behind it. The gold-silver ratio, a great thing to chart, had climbed back up to about resistance, which is 80 to 1. That's 80 ounces of silver to buy 1 ounce of gold. It's a great matrix to follow because it tends to give you kind of an analysis as far as has silver gotten a little bit overextended in relation to gold or vice versa. Now today marks the end of a trading quarter, and many traders will reflect on that quarter and examine the scores on the board. The 3-month performance: silver up about 15%, platinum and copper both up about 10%, and gold up about 5%. However, it's the monthly and the weekly performance that paint more of a disappointing picture. For instance, silver dropped about 5% in June and copper down about 8%. So ironically, if you do look at seasonal tendencies, June tends to be a real weak month here for the silver market. If you were able to sell silver on June 1st, cover it on July 2nd, trades worked out about 13 out of the last 16 years. So if you do enjoy seasonals, I will be looking at a couple that are in the stock indices here today that start today and then also on Monday. So one of them begins here today in the Dow Jones. Give me a call for more information on that. And then do also remember that seasonal tendencies, they have different inherent risks. They may not work out. What's happened in the past doesn't reflect future performance. So at the end of this video, there'll be a slide on that. Now today we do have a flurry of market moving economic data. So if you are up dramatically on your position, if you were uncomfortable by yesterday's sell-off, you got to break even, you're overextended, you might want to consider using this type of rally here to have some kind of protection in place, lighten up, buy some put protection, things like that. So you're going to have core PCE, personal income, personal spending, all due out at 7:30 a.m. Central Time, followed by Chicago PMI at 8:45 and University of Michigan consumer sentiment and inflation expectations at 9 o'clock. That's a whole lot of things happening in about an hour and a half period. So if you dodge a bullet with one, you might want to consider taking something off here, calling it an early Friday and checking out here and enjoying the weekend ahead. So the consensus for the PCE price index to increase 2.6% year over year, while the month over month is expected to decline 1/10 of 1 percentage point. The core PCE, that's what the Fed's going to be watching, which excludes food and energy, which is the thing that political pundits talk about and everyone talks about, is expected to rise 2.6%. It's 0.2% less than previous. April's 2.8% annual increase in the core inflation was the lowest since March of 2021. So if you have no idea what I'm talking about, simply put, at 7:30 a.m., data is coming out. The markets are going to move on this. So you want to strap in, buckle up, put your helmet on, throw your stops in, and get ready because it's going to be some volatile action here. So if you're trading SLV, the miners, or physical, you're going to be unable to participate in this because it all happens before those markets start getting active. But if you trade in the futures, remember volatility equals opportunity, and I firmly believe that in this day and age, every person who's serious about precious metals should have all 4 elements covered. Just like every toolbox has a hammer, a saw, a pair of pliers, and a tape measure. So if you're interested in opening up a futures trading account, give me a call. I'd love to talk to you more. Now back to the precious metals here. So we do have some critical levels that we're going to want to watch here. So you get to the silver market, we do definitely need to get back above on September silver, the $30 range. Above that, your critical level of resistance is going to be 31. If we could break out over 31, it should be another one of these YOLO moments where the ETF flows start to come in, people start to rotate out of different asset classes and chase prices higher. 32.50 is your critical breakout level. Below on support is going to be 28.79. You do not want to see the market close below there. It could extend a washout down to about 25.81, which is the 200-day moving average. Futures are trading at the 50-day moving average right now, which is 29.62. You get to the gold market, you look at that one, your critical level of support, again, I've been saying this for weeks, 2300. Your resistance point is going to be the 50-day moving average at 2364, and then above that, a breakout level would be 2388. I was talking to a couple traders yesterday, and I was saying that we've been so trapped in this range bound on the gold market that we get up to about the 50-day moving average and we tend to fold there. So I expect a lot of people to be trying to take profits, lighten up, and that number comes in right around 2364. They'll start to lighten up at those levels. So you're going to want to see prices trade above that level for at least, I'll throw the egg timer on, the baking timer, and go for an hour. And if we can hold an hour above that level, we'll probably come back in and re-enter the market. So markets across the board, a lot of euphoria out there at the moment. The only thing that I see that's suspect, dollar index down just slightly, but not too much here. So you got any questions, give me a call. It's going to be a great day in the markets here. I could feel it. But we do have all that data coming out. So again, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.